to MFB TV on Thursday the 17th of May. And here we are 1 week on from when many commentators thought that Mark Carney, the governor at the Bank of England, was going to raise base rates. In fact, 3 weeks before the announcement, there was a 90% certainty of it happening, and by the time we got to the day after the bank holiday on the Tuesday, it was down to a 12% reality check. But what is now quite interesting, the underlying cost of money is still saying he's going to do something sometime soon, but I guess the next logical point is the quarterly inflation report in early August and any announcements they choose to make thereafter. So what's happening in the wider market? Our friends at UK Finance, the super trade body for the entire lending industry, has published its recent report on mortgage trends, and encouraging to see that lending to first-time buyers increased slightly in March compared to the same month last year, whilst remortgaging levels softened slightly according to their latest survey. Separate figures coming from the Bank of England show that gross mortgage lending in the first quarter of this year is up at 61.1 billion, up from 59 billion in the same period last year, some 3.4% up over the equivalent period. Within those figures, buy-to-let figures quite strongly at 9.1 billion, and it showed that remortgages were really remarkably strong in that period, with purchases still slightly subdued at 25% of that figure, perhaps reflecting that landlords are still cautious about when buying further buy-to-let property. In other news, our property investor survey is out. It's our twice-yearly survey, and it's designed for us to gauge the property finance needs of investors and landlords, and your anonymous results are used by us to talk to lenders about future products in trying to come up with solutions that help you navigate your way through these rather tricky markets. So yet again, this is your opportunity to have your say on the recent changes and to give us guidance to take back to the lenders. The more responses we get from you, the stronger our voice on your behalf. And remember, it could be you that wins this luxury hamper. Want to take part? Give us a call or visit the homepage on our website. As usual, we continue to focus our attention on new products in the 5-year fixed rate market, and that 50% loan to value product from a well-known building society at 1.99% fixed for 5 years with a flat fee of $995 continues miraculously still to be available to you. Portfolio landlords are accepted, and there will be ERCs on that product, as you would expect with all 5 years. For limited companies, the Keystone brand has recently reduced its pricing and can offer you 3.84% fixed for 5 years for both purchases and remortgages, and can include trading limited companies. That will take you up to 65%. Equally, ERCs apply, and there is a 2% fee added to the loan. Interestingly, we have been selected with several other firms to pilot a new buy-to-let program for a new entrant to the market. It is well priced, and our consultants will be happy to quote it if it is appropriate to your requirements. So for these and all other product offerings, do remember you can come through directly on 0345 345 6788.